So you're thinking about buying a home in Phoenix, Arizona. Today we're going to talk about a topic that's on the minds of many homebuyers: interest rates and home prices. Now, I know these numbers can be a bit overwhelming, but fear not, I'm here to break it all down for you. Welcome to my channel, where we talk about all things real estate to make home buying a breeze. If this is your first time on the channel and you want to know everything there is about living in the Phoenix, Arizona area, then subscribe below and tap the bell for notifications so you can be the first to learn about the current market in Phoenix. I'm Heidi Littleton, realtor with my home group real estate serving the Metro Phoenix area. All right, let's dive right in. So you're sitting on the fence contemplating whether now is the right time to jump into home ownership. One of the factors that often holds people back is high interest rates. But here's the good news. Interest rates are not set in stone. They can rise and fall just like a roller coaster. Before we dive deeper, let's start with some context. Data is showing us that despite higher interest rates, which are actually in line with historical norms, home prices in Phoenix have actually been steadily increasing since our low in December. In addition, most economists believe the US will be in a recession sometime in 2023, which historically have brought with it lower mortgage interest rates. Keep in mind, we likely won't see those super low rates we saw before. That was a very unique situation. There are also 3 to 5 million buyers waiting in the wings for the rates to drop. All right, time to hop on this interest rate roller coaster together, shall we? When interest rates decline, it's like getting a discount on your mortgage. That means more money in your pocket each month, right? And guess what? When interest rates are low, it often leads to increased demand in the housing market. Remember those 3 to 5 million buyers waiting? More buyers competing for the same homes can drive up prices. It's like a bidding war. Add to that the already low inventory in Phoenix, and this means less availability of seller concessions and the ability to negotiate. So you might be thinking, wait, how does that benefit me? Great question. Imagine you buy a home when interest rates are low and home prices are on the rise. As those prices continue to climb, your home values increase too. It's like having a money tree in your backyard, but instead of leaves, it sprouts dollar bills. Now let's consider the opposite scenario. When interest rates go up, it can make borrowing money more expensive. This can lead to a decrease in demand for homes, which leads to less competition and can ultimately put a little pressure on home prices. It's like a seesaw, and instead of kids having fun, it's economists having headaches. However, don't fret. Even if interest rates rise, it doesn't mean the housing market crashes or prices plummet. Real estate is a resilient market, and fluctuations are part of the game. Remember, Rome wasn't built in a day, and the housing market didn't become unpredictable overnight. So what should you take away from all of this? First and foremost, interest rates are just one piece of the puzzle when it comes to home ownership. It's essential to consider your personal financial situation, long-term goals, and the overall market conditions. Now, let me give you a couple of real-world examples to illustrate how interest rates and home prices can change. Remember, these numbers are for illustrative purposes only. You should always consult a mortgage professional about your exact situation. Let's say you're looking to buy a $400,000 home and the interest rate is 5% with 10% down payment. That would mean a monthly mortgage payment of around $1,900. That's without taxes, insurance, or PMI. But if interest rates drop to 4%, your monthly payment would decrease to approximately $1,700. That's almost $214 in savings every month. Imagine what you could do with that extra cash. On the other hand, let's say interest rates go up to 6%. Now your monthly payment would increase to about $2,100. That's an additional $220 each month. However, keep in mind that even with this increase, home ownership can still be a great long-term investment. And don't forget about the increased opportunity to negotiate on home prices and for seller concessions. Plus, you have the opportunity to refinance if you start with a higher rate. The bottom line is this: don't let interest rates scare you away from your home ownership dreams. The housing market is constantly evolving, and with the right guidance, you can make informed decisions that align with your long-term goals and financial situation. Well, that's a wrap on today's video. If you found this video helpful, don't forget to give it a thumbs up and subscribe to my channel for more real estate tips and tricks. Remember, I'm here to guide you through every step of your home buying journey. If you have any questions or need personalized advice, don't hesitate to reach out. All of my contact info is below. Until next time, happy house hunting.